Welcome to Charts Today. My name is David Linton, and today's edition for Wednesday, the 25th of March, comes to you from London. And all eyes on the Middle East situation and the oil price. Oil price down 5% today, and we are seeing downside targets potentially pointing even lower. We crossed below the cloud. These downward moves based on Trump comments, of course, but the reality is short term, the market is bearish. And if I look at my matrix, this is my weekly, my daily, and my 60-minute, my long term, medium term, and short term. We are seeing bearish short term, but of course, the medium and longer term trends are still bullish. The exception being US nat gas, but we're seeing European gas bullish, neutral, and we're seeing even UK gas in the same light. So based on just purely on the charts, we can say we're bearish short term, we're bullish medium and long term. And remembering that time horizon is really key. We put out our energy report to clients every morning, to our institutional clients, and it's a very mixed picture. This morning, we've given key levels. That's all goes out in the report. And we've also been doing for clients our soft commodities weekly report. And we'll look at some soft commodities today because there's some interesting charts there. So those reports go out to our institutional clients. But I thought I'd just share with you that I'm spending my entire time just analyzing markets. And so what are the effects? And of course, a lot of those clients are using the targets on Bloomberg. So you can be confident that lots of institutional users are now using these targets, and of course you can use them on TradingView as well if you don't have UpData. But UpData is obviously the system I use, and that's where we develop the targets first. And there's a whole series of improvements coming in the software on that as well. And I'm running here on LSEG data. If you are running on Metastock, you would have the same data. Metastock Zenith. It is effectively the same system as the LSEG system, and in UpData you can just configure your data services. So the choice is yours. We are compatible with lots of different services, so that's part of the system. So looking at the charts, the dollar, we'll start with the dollar index. We see here that we are in this very much in this sideways range. The great thing about sideways ranges like this is when they break, the moves can be really explosive. And if you've done my training course, we're doing special offer on that this month. If you've done my 12-hour training course, you'll know the rule on patterns. And the reality is, if we break lower, that move there is what we'd expect to see all over again, and we've got a downside target corroborating with that. But the key thing is, it's a case of waiting and seeing. That's the daily chart, the shorter term picture. We are really in a range there as well, so really quite key. That means currencies are fairly sanguine at the moment. Bitcoin is actually up slightly, but the reality is that chart is also still below the cloud, and we didn't quite get to the downside targets. If you're trading Bitcoin, you'll want to use the shorter term target. So you can see here we have got a shorter term upside target for Bitcoin. Again, you can be looking at these targets on your TradingView, but that's where we are. The Nasdaq, we saw markets down yesterday, and then we had a bit of a relief rally with his Trump comments. But the reality is that we are bearish below the cloud with a downside target, which can only be removed with a new high. So we are seeing the futures up more today on the basis of there's a bit of a relief rally going on after the comments in the US that there's a truce and that Iran will be letting ships through the Straits of Hormuz. So that's effectively just giving markets a little bit of a relief rally. And we're certainly seeing that in countries like Japan, which really are very susceptible to energy coming from the Middle East. So really quite interesting that we are seeing a bounce in markets. If we look at the Aussie market, for example, up 1.8%, bounced on support, so that's looking quite strong. No clear targets there, but that's really quite interesting. If we look at the shorter term chart, we do have an upside target. Downside one wasn't activated, but we are still below the cloud, so that is counter trend. You can't rely too heavily on that until we are in a new uptrend. But the reality is the picture isn't changed on a lot of these medium-term charts. We've just found support. Looking at some of the soft commodities, well, first of all, let's look at gold. That really did have a big sell-off this week on the daily chart, but we can see here, and that has given us a lower high, lower low scenario. So that isn't great, but we did bounce just on the lagging line. The short-term targets for gold, we've got a new upside target, and we are breaking above the cloud. So that is looking more positive. There's a bit of an ascending triangle going on there, and we are pushing higher there with a new upside target. Silver, similarly, recovering with an upside target, not quite as big as the gold one, but it is there. Now, I mentioned soft commodities in my morning call, my weekly report for soft commodities. This is more and more something I'm looking at for clients. I'm working more and more with clients in this area. So just quite interesting to see the effect of commodity prices and what we've seen in the Middle East. We've got big upside targets there for coffee. If I look at cocoa, which has been in a very vicious downtrend, starting to be a recovery again. If we break that critical level there, you would look to that target. Sugar has been a really interesting one. I've been working with a sugar trading firm in Australia, and that has really turned a corner on. If I look at the daily chart for sugar, we can see here it's been in a really clear bear trend, across the cloud, new upside target. So that's quite interesting looking there. And if we look at just some of these other soft commodities, they're off today, but we have seen grains, wheat, that's really rocketed. It was actually doing it in February and met the target. And corn has been another one where we've seen real strength and upside price targets. Remembering you can do this on any chart you wish, and if you're using the Metastock Zenith or LSEG feed, you'll be looking exactly the same codes that I'm looking at here. The big one is for commodities is urea. Now this is just a daily pricing, but this is the main constituent for fertilizer, and most of it, well, the vast majority that we see comes out of the Gulf. Gas production is very important for producing urea as a byproduct, so this is very closely related to the gas price. Gas prices are falling back, but urea prices are not, primarily because we have got constraints on getting out of the Gulf of Persia. So that is really a fact that's affecting a lot of crops, and so soft commodity products we are seeing, and even things like rice. This is a really big issue for Asia, which is why this is then filtering through to bond markets. Now, I'm watching the bond markets very, very closely. Japan, we've got a new upside target for Japan, and we're nearly there. And that's really quite worrying there on the medium-term chart. And if we look at US bond yields, they did pop. They've pulled back today, but we have activated the target. That target can only be activated with a move all the way back to where we were at the start of the war and below. So we've got inflationary pressures that are embedded, whatever the outcome now, really, in the Middle East. So it's very easy to be glued to the screen and watching the news flow, but the reality is that a lot of damage has already been done in terms of the charts, and we're seeing that in soft commodities, we're seeing that in inflationary pressures, we're seeing it in the bond markets, and then we're seeing stocks rolling over through their clouds. So it's a very interesting situation. Do watch your targets and your time horizon. Until tomorrow, happy charting. Bye for now.